Edward Stevenson with TimelessWealth.net, and per the request of members at TimelessWealth.net, this will be a technical analysis video on Citigroup Incorporated, stock symbol C. What I've drawn in here is a triple bottom chart pattern based on the low coming off of this trading session, another here in late January, and another period in mid-February. Collectively, this comprises that triple bottom chart pattern and this supporting trend line at $3.15 per share or so. After this triple bottom chart pattern occurred, what we saw was nothing more than technical breakout after technical breakout. That is, if we plot resistance based on this peak right here, we can see a breakout occurred on this trading session on above average volume. These green bars right here represent volume corresponding to the price action with these candles. Following this trading session, we formed resistance at $3.86 per share. Few trading sessions afterwards, the price came down and tested $3.86 per share, and the support level stood its ground, after which we saw further price appreciation. We occurred another resisting level right around $4.20 per share, and I'm basing that off the peak on this trading session. However, again, we broke above this resisting level in this period, despite the fact that we declined afterwards or retraced in the market due to short-term overbought conditions. However, a few trading sessions back, again we broke above this resisting level, in fact gapped up, pulled back and tested specifically $4.22 per share, and once again rallied to a new 5-month high. And the last level of resistance that we're looking at is based off of this peak right here, which was $4.41 per share. But for time's sake, we'll say 440 is a key supporting level now, rather a short-term supporting level. Another one we have is at 420. We'll just say that all these values are truly arbitrary, whether they're a point or two off. So we'll say 440, 420, 385, and 370 are key supporting levels, as well as taking this period right here into consideration. We had resistance right around $4.30 per share, and as the price rallied, it broke above $4.30 per share on above average volume, which was bullish. So this is another key supporting level, $4.30 per share. On the other end of things, looking at the 1-year chart on Citigroup Incorporated, we have resistance at the on the $4.50 mark, and that's based on the peak coming off of this period right here, rather this trading session, as well as a key mark that supported the price for a period of about 3 months, August, September, and October of 2009. This period right here, you can see the price trended above it up until this period where it broke below it and retraced or corrected itself. A break above $4.50 per share would be considered a technical breakout, assuming that it would occur on encouraging volume that is above average volume. The peak off of this period, just prior to the session where the price gapped up, was $3.85 per share. That is $4.85 per share, which is the next key resisting level. You can see there's quite a channel in between $4.50 per share and $4.85. So imagine traders, especially retail traders, may look to take advantage of this outstanding channel right here in the event that the price does break above $4.50 per share and gives off a technical buy signal. Following which we have resistance at $5 per share, and this is really the ultimate goal, the ultimate price target, and the ultimate resisting level, for two reasons. One, the fact that the price struggled to break above $5 per share on this trading session right here where it gapped up, and the following trading session the price gapped down below support, which was at $45 per share again. However, $5 per share is also psychological resistance, given the fact that it's that level where a stock goes from being a penny stock by definition to being a big board stock, and the perception the market has of Citigroup Incorporated changes completely, even though again it's really arbitrary, because you might be upticking 1-2 points or downticking 1-2 points. So what difference does it really make? But in any event, $5 per share is a key resisting level, and this is the one that I imagine a lot of people are watching for, just as much as the 485 and 450 level. Now the play here is really do or die on the long side of things, so to speak. The reason I say this is because we have a few gaps that are outstanding, and the rule of thumb is that gaps tend to fill. Well, if we have this gap right here between 418, we'll say, and 422 per share, this gap should in theory fill. However, we've seen that before in early March where we had a gap right in between 350 and let's say 355 per share. That gap never filled, at least during the month of March, and however many days we've traded so far in April. On the other end of things, we have prospective opportunity for longs. We have a gap between that just under $5 per share based on this trading session and the one that followed where the price gapped down. If gaps do tend to fill, we should see this gap fill. Whichever we see fill first is really a test of time. Only time can tell whether we fill this gap right here and this one before we fill this one right here. And I'm sure that most longs are enthusiastic about filling this gap first before filling any gap whatsoever. Once more, here's a 1 year look at Citigroup Incorporated. We can see that we've progressed quite a bit since this potential triple bottom chart pattern, and hopefully we'll look for further growth on strong volume. Once again, this was Edward Stevenson with TimelessWealth.net. I strongly encourage you to visit TimelessWealth.net and join my free newsletter for overlooked trading and undervalued investment ideas. We offer an array of services for our members, and best of all, they're all free, so definitely worth checking out. Again, that's TimelessWealth.net. Thank you for listening.